Hi, everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. When I left you last week, I said that I expected that this could be a very interesting week ahead, and it certainly has been. We're in the middle of reporting season, and that is when there is always the possibility of having a surprise or two to liven things up. If we couple that with the reality that a fair number of the FANGs are, or were, sitting close to key breakpoints, then on top of earning surprises, there was always the probability that we might get an SVA buy or sell signal as well. As it turned out in this past week, we might have all of the above. Anyway, let's not waste any time. Without any further ado, I really need to take a close look at the FANGs and what went on in this past week. But as always, before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, let's start off with Amazon, which reported very, very nice numbers. And what was important about that, it confirmed that nice uptrend, that nice improving uptrend in the fair market value, which I had been hoping would be the case. The stock had already broken out over its bubble price, and it now looks as if it's heading strongly to its HB1, which is very close to $190. So a decent upside ahead. Meta came through with some absolutely spectacular numbers, although, to be perfectly honest, the current numbers were in comparison, to the numbers at the very, very bottom of that miserable downtrend of earnings in the fair market value, which Zuckerberg brought about by trying to force the metaverse on all of us. Well, that's changed. And we're now back to the long-term trend, or maybe somewhat above that. Anyway, the market got very excited by those numbers and has leapt today to, and perhaps over, its bubble price of about $475. And the reason I say perhaps is because what we need to do now is to incorporate the new balance sheet into our SVA chart of the company. So we'll be seeing that next week. Anyway, so far, looking pretty good. Why would I be a little bit concerned, however, at the bubble price? And the reason is because if I show you the very, very long-term chart of the company, what you'll see is that every time that the stock got up to its bubble price in the past, that tended to be it for the stock. So if it's going to break out here, it's going to have to basically incorporate what the market might feel to be new and improved fundamentals into the outlook. NVIDIA, well, we haven't seen the numbers for NVIDIA as of yet, but I think NVIDIA has been emboldened by what's going on in AI, and of course specifically a couple of the FANG stocks, including Meta, and the stock has broken out nicely over its HB6 price. That's 33 times book value. Now, that was the very, very long-term high, except for earlier this year when the stock got up to its HB7, or 42 times book. It looks very much as if the stock is going to be hitting there once again. Netflix, well, Netflix had some nice numbers following on from their previous quarters. They had two nice quarters in a row. The stock is nicely over its HB1, and as long as it stays above that level, it's got to stay there, then my suspicion is that we're heading back for the HB2 level, which is 12 times book. Microsoft, when you parse the Microsoft numbers, there were some great numbers, and there were some boring numbers. And overall, things were what I might call pleasant. And in other words, basically confirming what Microsoft has said all along. So we don't have the necessary oomph yet, or perhaps maybe, to break out over the HB2, which had stopped the shares already twice before this year. So we shall be watching this very, very carefully. I would have thought that with the AI revolution, that Microsoft would have been a little bit more vigorous on the upside. Well, the breakout is still TBA. Alphabet, I thought Alphabet's numbers actually were okay, but obviously they were disappointing to the market itself, and the shares have set back sharply to its MSG price, which is 5.5 times book value, which has been a nice base for some period of time, but the MSG price now has to hold. So keep your eye on this if you hold the shares. Apple, I don't know what we can possibly say about Apple. It's the 6th or the 7th virtually flat quarter as far as sales are concerned. So no growth here. A little bit of an uptick in the earnings, but not much. Not enough to write home about. The big disappointment with Apple, however, was the failure of the company to follow through with its share buyback. Remember, I had been saying, look, okay, if we take a longer look at the stock, the company, we see this downtrend due to share buybacks, and I was kind of expecting that if those buybacks continued, that the slope of those lines, the structural breakpoints would fall. Didn't happen. Well, what's been really, I think, in my view, has been really driving Apple is those share buybacks and the improvement in the ROE and in the earnings that results from that. No buybacks. I'm going to be very interested to see what happens. If the HB5 fails to hold, and right today it's right there, if that fails to hold, then I think we've got a short-term sell on our hands. Finally, Tesla has been coming right down to its HB1, which is 9.5 times book value. The stock has already had kind of a little bounce there. Didn't quite get down to the HB1, but it's already had a little bounce there, and it's going to be interesting to see what happens now. Well, you know what I feel about the electric vehicle industry. It's the Canadian, at least the U.S. automotive industry in the 1920s all over again. Anyway, to briefly summarize, I almost need to recap the FANGs on a stock-by-stock basis. Things break down into 3 general categories. Those that really got the market's attention, those that are steady as she goes, and Let's start with the 4 wow factors. Meta obviously got everybody going with blockbuster numbers on a year-over-year basis, although they were not as interesting on a quarter-over-quarter basis. My target from over a year ago has now been fully met, and the shares need to head into an unknown space above its bubble price. What the bubble price actually is, of course, I don't know, but by next Friday we will. Keep in mind that the market has a memory, and it does not casually allow prices to head into the wild blue yonder just for the heck of it. I've been looking for something good from Amazon, and we got it. A nice jump today to get some oomph into the shares, which had been already oozing higher. Looks like the HB1 or 9.5 times book is in the cards, and maybe more, of course. But let's see what happens at the next breakpoint. NVIDIA is putting on a nice show today as well, breaking out strongly over its HB6, its previous all-time high prior to this year. It looks to be heading back to its recent extreme high, its HB7 price, or 43 times book. All well and good. So, why would you want to have any concerns? Well, the market cap of the shares is now going for 33 times sales and rising. I've been here before, and the end game has been volatile, shall I just say. Netflix is in the midst of a nice breakout, thanks to the January quarterly report, which maintained the powerful trend of favorable earnings and sales gains carrying over from the previous quarter. It's almost a characteristic of the shares now that the share price gaps up and over the next higher breakpoint. But, of course, come to think of it, as you'll remember, it's the same way when it came down as well. Okay, how about the two stocks that are steady as she goes? One can take Microsoft on any number of levels. Some year-over-year and quarter-over-quarter comparisons were powerful and promising. Some were just, and overall things were okay. In other words, just what management had been saying all the way along, that HB2 remains, therefore, a tough hurdle yet to surmount. Well, Alphabet disappointed. I thought that the numbers were okay, but the market obviously wanted more, and the stock is setting back to the MSG price, 5.5 times book. So watch. Now the disappointments. Apple and Tesla continue to be a major concern because of both their shorter and longer-term potential growth outlook. Apple continues to show almost no growth at all for several quarters now. But I remind you that it isn't necessarily sales and earnings that drives Apple, it's share buybacks. Ouch. There have been no buybacks, and therefore we may be looking right here and now at a breakdown below the HB5, which is 26 times book. The real mystery is how the shares have hung in for so long given how indifferent their results actually have been. As far as Tesla is concerned, I've been saying that the electric vehicle market is looking a whole lot like the mid-20s when everybody and his brother decided to start building gas-powered automobiles, which led to a catastrophic consolidation of the industry. Well, 2 weeks ago, I again pointed out that as much as I did not like the company, nevertheless, for any remaining optimists, Tesla was right there on the verge of providing a clear sell signal, or not. It was a stock I warned you to keep a close eye on, a very close eye on, if you owned any of the shares. Well, we did indeed get the confirmed sell signal that I was expecting. That came 2 days before the company reported disappointing numbers, which was when the stock really let go. Overall, then, the performance of the FANGs looks to be kind of broadening out, and investors need to be increasingly aware of some specific risks and, of course, some specific opportunities within the group. Anyway, for now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and the senior portfolio manager at McNichol & Associate Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you next Friday.